Michael Burry. If there's one person in the trading world who has become the symbol of the word against, it's Michael Burry. Against the crowd, against bubbles, against euphoria, against rose-colored glasses. And every time the market goes crazy, his name pops up in the headlines again. He's not a media guru or someone who makes daily predictions on social media. In fact, he regularly deletes his accounts. And if you ever heard the phrase that the guy who predicted the 2008 crisis, you're talking about him. His path is anything but a classic Wall Street story. Burry is a physician by training. He studied medicine, worked as a resident, and simultaneously spent nights analyzing companies and publishing his thoughts on investment blogs. No fancy studios or marketing, just deep analysis, so much so that professional investors noticed him. But to understand his thinking, it's important to return to his roots and discuss his intellectual landmarks. One of his most important influences was Warren Buffett. Burry studied his letters to shareholders and his philosophy of value investing. But while Buffett emphasized long-term ownership of high-quality businesses, Burry sought out situations where the market temporarily lost touch with reality. He didn't copy Buffett's style, but he adopted his foundation, fundamental analysis, and discipline. All great investors start with the basics, understanding, reporting, business logic, and risk management. That's why I created my Telegram channel, to systematically analyze the market, explain strategy, and demonstrate how to apply theory in practice. There's too much information out there right now, but not all of it helps you make money. In the channel, I share working tools, trades, and the logic behind entering positions. If you want to delve deeper into trading, the link is in the description down below. And every week, I hold a giveaway for a 100% bonus on your deposit, so you can test strategies without significantly risking your own balance. To participate, just write "I want to join the giveaway" in the comments, and we'll keep going. In 2000, Burry launched Scion Capital, a small hedge fund named after a spaceship from science fiction. It posted outstanding returns in its first few years. While the market was riding the dot-com bubble, he sought out the undervalued companies. When the bubbles burst, his fund fared better than most. But the real legend begins in the mid-2000s. Burry began studying mortgage bonds. He literally dissected them line by line, read the issue prospectus, and analyzed the structure of subprime loans granted to borrowers whose credit ratings were high enough to be considered prime. This category includes, for example, people with a short credit history, borrowers who have defaulted on their payments, the unemployed, or those with low financial security. And ultimately, Burry included that the system was rotting from within. The US mortgage market was a ticking time bomb. But the problem was, no one wanted to hear it. Back then, banks were making billions. Rating agencies were giving them AAA ratings. The real estate market was booming. The media were spinning tales of eternal rising housing prices. And Burry was saying it will all collapse. He begins buying credit default swaps against mortgage securities. Essentially, he was betting against the entire system. And in 2008, just as he predicted, everything collapsed. Scion Capital earns a cumulative return of around 489% during this crisis. For investors, this translates into hundreds of millions of dollars in profits. The story becomes so sensational that it later adopted into a film, The Big Short, starring Christian Bale. From then on, he earns the nickname Cassandra, a man who predicts disasters but no one listens to him. After the crisis, he closed the fund and disappeared from the public eye, but returned after a while. He reopened the investment company and continued to do the same thing, looking for imbalances. For example, his major bet against Tesla sparked a storm of criticism. The stock continued to rise, and many considered his position misguided. He later closed the short, and in 2002, the tech sector did indeed experience a major correction. This is an important point. Even the most renowned investors aren't always perfect at timing their moves, but their logic is based on risk assessment, not emotion. In 2023, he again attracts attention by opening large put positions against indices. The media begins to speculate Burry is expecting another collapse. He writes short messages like "sell," deletes them, returns, and disappears. His behavior appears chaotic, but his strategy is not. He systematically seeks imbalances in asset valuations, I'm not sitting here telling you this to talk about a brilliant predictor. The message here is something else: psychology, the ability to withstand pressure, and the ability to go against media narrative. His advantage lays in his character. He was prepared to be independent of approval. Burry preferred to distance himself from everyone in order to ultimately emerge victorious. Yes, you could say he seemed like someone consistently waiting for the end of the world. But if you break down his every action chronologically, you will see that he was simply reacting to an imbalance. The example: when the market is irrational, he sells, and vice versa. And that's why there's always tension around him, because when he starts to work hard, it makes even those who are used to laughing at him think twice. Michael Burry's story is more than just the tale of a financial genius who predicted the 2008 mortgage crisis. It's an example of how combination of knowledge, analytic skills, and personal qualities, focus, discipline, and the ability to think independently allows one to achieve outstanding results where most see only risk and chaos. His journey demonstrates that a successful investor doesn't follow the crowd and isn't afraid to go against the market if they see objective patterns and opportunities. Burry has proven that even the most challenging, volatile situation can be profitable if you approach them with dedication, study the data, anticipation, consequences, and act decisively. Ultimately, this whole story serves a reminder that the market rewards not those who shout the loudest, but those who analyze the most deeply. If you want to learn to see the market more deeply, understand imbalances, trade using systematic analysis rather than emotion, join my Telegram channel. There I analyze real trades, demonstrate entry logic, and share strategies and signals I use myself. The link down below in the description. If you found this video helpful, be sure to like it, subscribe to the channel, let me know in the comments how you enjoyed this analysis, or if you'd like more stories about legendary traders. Thanks for watching, and see you in the next video.